There's a very real possibility that SoFi breaches 50 bucks a share by the end of the year. The news that just came out today is very bullish. I'll break down what that is, including SoFi's current fundamentals, future growth expected, the chart as well, and my trade ideas, what I'm watching for with SoFi stock. A lot to break down in this video, so be sure to drop a like and maybe even subscribe as well if you do want to enjoy. Really appreciate it, guys. We just hit 10,000 subscribers. Next goal, I guess, is 20K. Stock right now is flat on the day, 29 bucks a share. The market, again, is hot. Momentum is at a very high level, and I am still concerned about a short-term pullback, but that doesn't mean that I can't identify quality stocks that are growing at great paces and manage risk accordingly. Use a rules-based approach backed by smart money to make sure I'm profiting on these moves up, and if I'm wrong, I am wrong early. That is the goal for any trade or longer term investment I make in the market. And of course, for more trade ideas, smart money alerts, market analysis, and much more, check out my free newsletter. Links are down below. But here is the news that just came out today. We've had rumblings of this for a while, so this is not the first mention of this, but this specifically just came out. Crypto startup Zero Hash raises $104 million from Morgan Stanley, SoFi, Apollo, and others. So we knew SoFi was getting back into crypto after they removed all of that back during 2022. They were in crypto, got out of it. It was a big deal, crypto bear market, but now crypto is coming back very strong, and they're doing it the right way, in my opinion. Now, this is not about speculation. This is a bit different. So Zero Hash, specifically, if you guys don't know, I'll zoom in here a bit more. They provide banks and fintech firms with the ability to offer blockchain-based products in three major areas: crypto trading, stable coins, and tokenization. The latter two, I think, are much more interesting. Crypto trading is cool, but that's a bit more speculative in nature. I think the stablecoin and tokenization rollout might have a bit more value to everyday people. Again, it's too early to tell for sure, and I'm not a crypto expert by any means. And let me know down below if you guys have any other opinions or outlooks on that. But part of this raise is obviously accelerating adoption across all three of these verticals with a range of customers who are also investors. So while he couldn't comment on whether Morgan Stanley and SoFi were also clients, he suggested announcements will be coming very soon, and spokespeople for Morgan Stanley and SoFi declined to comment, which, look, no guarantees, of course, but there's a good chance SoFi is a part of this or will benefit in some type of way. So this is so good. And again, we knew SoFi was getting back into crypto, but we're seeing more and more headlines of this, more crypto related patents and trademarks coming out of SoFi. So they're going to ramp that up huge very soon, and barring a larger pullback or a mini recession of sorts, where again that impacts not just SoFi but the entire stock market, the stock is going to continue to go up. And on this announcement as well, if it does come very soon, likely in my opinion before October, or again by October, so that's why I would say have some shares, have a position before October 1st. The stock's going to pop up huge, and you're going to be glad you're in this name, not just short term, but longer term as well. For some more data points here, institutional ownership continues to go up. We had some institutional buyers back in the day. That dropped off a little bit, came right back up. We all know the story about SoFi. They under-promise, over-deliver, had a bad rap with Wall Street analysts as well. We had sell price targets, $4 a share. It's just crazy stuff last summer where it was obvious that we were going to bounce out of that longer-term range. We were calling out SoFi for a very long time. Now we're up at $30 a share, all-time highs, so it's not as good of a buy. I would not go all in right now, but it's clear to me that institutions are almost fully back on board, and we will likely see much more upside, short, mid, and even longer term as well. So part of what I do is look at smart money, see what they're buying or selling, take their strategies, look at the chart, look at the setup fundamentals, and put together a sound, more confident investment decision, whether that be short, midterm, or longer term as well, and say, okay, is this a stock we want to be bullish on, bearish on, and we have actual data to back our decisions, as opposed to simply looking at a stock, it goes up, and you're kind of just taking a random bet. You can get lucky, but the more data you have backing your decisions, the better. following smart money, I think, is so important. So this just came out yesterday. SOFI $30 call, $30.50, expiring end of October. Decently sized bet. It's saying 27,000. It's more like 200,000 from the actual flow. So it's a decent bet. Potential multi-leg option trade. It might be a call debit spread. I think it's more just a straight up purchased call option. Regardless, it's a short-term, decently bullish bet, and that's what we're looking at day in and day out. Here's a look into the private group as well. Back in September, we highlighted a SOFI $30 call option, 21% of the money, $2 million plus in premium. This is very bullish. And of course, we go through the chart as well. The setup SOFI back then was at 24 bucks a share, hovering above its moving averages, making higher lows and higher highs. This is what I do day in and day out, spotting the best opportunities, managing risk as well, following our rules. So if we're right, we have data to back our decision. We're in, we're doing well. And if we have data and we're for some reason wrong, you use risk management and get out early. And I have a whole training module, 20 plus minutes, where I break down why I follow smart money and how we could use their strategies and see what they're doing to make better, just more profitable decisions on a fairly consistent basis. So links down below to check that out. And if you guys want to book a call with me and maybe join the private group, we'll break down what it's all about, if it makes sense for you or not, and much more. Links are down below. But for SOFI's fundamentals, a quick recap: 29 bucks a share, of course, a $35 billion market cap company, PE of 59, again, in my opinion, a bit elevated, but it's a stock, a company that is growing and growing faster and faster quarter after quarter, so they deserve a decently high valuation. The question always is about these growth stocks: how high is too high? Palantir, of course, is that too high? Some may say yes, some may say no. It depends on your due diligence and future expectations. I think SOFI can grow into this PE ratio, and I'm still riding momentum. So even though I might think it's a little overvalued, the stock is still moving up. Institutional buyers are in. Smart money is bullish. Positive catalyst still coming out. So I don't want to fight the trend, but I'm definitely very careful, because if there is a larger market-wide pullback, SOFI could definitely get hit fairly hard. So just be aware of the risk factor here with a growth stock like SOFI. Quality company, but it still is a bit of a risky growth stock in my opinion. So revenue last quarter though, $1 billion, 31% growth. Operating income, $150 million. Net income, $97 million, up 450%. Balance sheet, assets of $41 billion, liabilities of $34 billion. Net debt of $1.3 billion. That's not bad. Cash from operating activities, $100 million, a bit volatile there. Free cash flow, $40 million, bit volatile as well, but that's to be expected. EPS this year is expected to be around 31 cents a share, up to 92 cents by 2028. That's solid. And revenue of $3.44 billion, up to $5.67 billion by 2028. So great growth expected, and the chart as well looks really strong. We've been making higher lows and higher highs for a while now. So back after the tariff crash, when I see price action like this bouncing off of really good support back above the 200-day moving average, more support being formed, this is a time where you want to get into shares, call leaps options, short-term call options. You could sell puts as well, but when you're in a strong uptrend, take part in that momentum, follow the trend. Now, in certain environments, in a flat environment, and around here, we were consolidating in August a little bit. That's a great time to sell some puts. And I've been selling puts very recently. Early September, I had some put alerts in my private group. So those are still doing well. And you could still, get into sold puts in this range here if you want to be assigned shares longer term. I don't mind that. But momentum is hot short term, and I do think a pullback is possible. So I don't want to have all my capital tied up just in case we pull back, which worst case scenario could be all the way back down to $18.50 a share, which you guys might be saying, okay, so why do you think the stock's going to go up to 50 bucks a share? That is if the overall market pulls back. If the overall market pulls back, that is where we'll likely find a ton of support that aligns with a 200-day, and I would go all in at that point in time if it does happen. So that's the bear case. I don't know what the odds are of that occurring. I think the odds are fairly low right now, but I want to make it aware to you guys that that is possible. Now, on the flip side, I'm still mostly bullish on SOFI. The trend is up, so I'm going to stay bullish. And based on the news today, based on what can be announced very soon before October 1st, before we even pull back, before we have the chance of pulling back, we might go much higher. And even after the pullback, we could still end up at 50 bucks a share, which from current levels would be a 70% move or so. That is kind of insane. It might take a bit more for that, not gonna lie, but it's definitely not impossible in this market. Stocks that catch a bid and have a ton of positive news, and for SoFi's earnings as well in early November, that could really change the game. It's not out of the question whatsoever. So as long as the trend is up, I am still bullish. It's all about managing risk as well. So follow your rules-based approach. If you don't have one, you should definitely get one. Follow smart money as well. Get in where it makes sense. Follow the trend. If you're wrong, get out early. If that pullback starts to occur, get out early. Don't hold your leaps options down 60% like I see some people do. It's just not the best strategy. Even though maybe longer term you'll be fine, just do shares at that point. Don't do the call leaps options. But if it continues to go up, hold the call leaps options. Don't sell early. Take part in that huge uptrend. You don't have to take large losses. That's what smart money does. They follow a rules-based approach. They follow the trend and they manage risk accordingly. So I'm still very bullish on SoFi. Everything looks really good. I'm going to stay bullish. I'll likely be adding to existing positions very soon. I'm still concerned about the market though, so I'm managing risk accordingly. I'm not going to buy SoFi and just turn away and, lose the password to my brokerage and not check the price action and not analyze the charts. No, I'll be checking this closely because I do think momentum is hot and there is a bit of risk with this, but it doesn't mean I'm not bullish. Even after 2026 as well, longer term, 5 to 10 plus years, SoFi will 100% be above 50 bucks a share, a much larger company based on their current product, service rollout, future growth, etc. So for those trade ideas, again, just getting into shares is definitely not a bad play whatsoever. Buying right now at $29.70 a share. We're at all-time highs, so it is risky, but the trend is up, so manage risk accordingly. If we start to really break below key moving averages or key levels, then trim the position, but it depends on what your time frame is. Of course, if you're a longer term investor, maybe just hold the shares. It's honestly up to you. In terms of specific plays, I've been selling puts on SoFi. That still looks okay. I want to target lower strike prices as low as I possibly can. So 26 is pretty good. If you go on margin, and margin is obviously a risky thing, but you could go a bit lower, and if you manage risk, it really isn't that bad. And if you have the cash ready to buy the shares, if the stock does fall down, then that's okay. But cash secured puts are, of course, a much safer play in any market environment, I would say. So 26 around there. You're going to get around 65 bucks in premium, and for the month, that's going to be around 2.5% return. That's pretty good. So we're going to times that for the year. 30% returns annualized. That's not compounding profits. That's pretty solid. Of course, me though, I wouldn't go all in into sold puts right now. It's a good strategy, but when the trend is up, I'd rather just play shares and capture that upside, or just get into call leaps as well. So going out 2026, September, 2027 as well, January, that could be pretty good actually. So I'll do around a 80 delta. The $20 call looks pretty good. So you're going to spend around $1,300 to control 100 shares, which normally would cost $2,000 at that strike price. And if SoFi makes that eventual move up to 50 bucks a share or higher, and you're still in that call leaps option, and the chart still looks good, it didn't break your rules-based approach, you're going to make a ton more money with less capital. So that's what I would do. And again, if the stock moves against you short term, especially if we have a larger pullback, which no one knows for sure what's going to happen, but if it does pull back, manage risk, get out early, preserve your capital. It's really that simple. So those are the trade ideas for SoFi. Overall, though, looks really, really good. So that's it here for this video. Let me know down below your opinions on SoFi as a company, as a stock. If you guys enjoyed and found some value from the video, I would really appreciate it if you did drop a like and maybe even subscribed as well. Hopefully, you guys got the gist of what I was going through here, how, again, there's a threat of a pullback, but if you manage risk, you could still take part in this uptrend and make a ton of money. You have to remove your bias from trading and longer term investing. If your time horizon, though, is 5 to 10 plus years, getting into SoFi and kind of just waiting for the execution to roll out, and it seems like that execution will occur at the company, you'll be fine longer term. So don't sell your long-term shares, but short to mid-term, just manage risk and follow smart money. So that's it for this video. I'll see you guys in the next one. Peace out, guys.